All right, joining me now, Allianz Chief Economic Advisor, Mohamed El-Erian. I don't think you ever got an introduction with that before, Mohamed. I don't know if you're a fan of those old Run, Shall Run karate movies, but the reason I use that clip is you've got inflation fighting, the inflation mandate fighting the jobs mandate. Then every now and then something else jumps in, housing or whatever. So the Fed's got all these official mandates, unofficial mandates. How do you see it working out?
So I love your framing that we've gone from duel to dueling. And yes, I remember the movies. Look, for now, as we just heard, the Fed will rightly put its emphasis on the employment side and will somewhat worry less about inflation. For now, I want to stress for now. This is not a Fed that's looking forward. Think of it as a play-by-play Fed. It looks back and tells us what has happened, but it refuses to take a vision of the future. Like Larry rightly said, we don't know how they feel about deregulation. We don't know how do they feel about the AI revolution. We don't know the exact balance between the supply side of the labor market and the demand side. So I worry, Charles, that we're not going to get the full benefit of monetary policy easing because the Fed is so backwardly looking.
So Mike Wilson's been saying for a couple of weeks the U.S. has gone from this 3 years of rolling recession to now a rolling recovery. Is it too soon to make that kind of assessment?
I think we are steady. We are not in a strong recovery mode as yet. The labor market isn't allowing that to happen. My worry, Charles, is that we've gone 5 years with inflation above the inflation target. The Fed itself, that keeps on rolling its target every 2 years, is telling us another 2 years. So there's going to be 7 years of the inflation target above inflation. And that speaks to the Fed is not just problematic when it comes to being just backward looking. There are some other fundamental issues that is problematic with that institution.
Federal Reserve reform is obviously a huge topic. It goes hand in hand with this push, if you will, that Jay Powell mentioned right out the gate at the first question about Fed independence. You wrote a great piece, Powell's Last Chance to Protect the Fed. And I guess the question is, you say Powell should be playing a role with respect to that reform. My question is, does he even want to?
Well, certainly so far he suggests he doesn't want to. In fact, so far, he hasn't acknowledged that the Fed had problems. And let's just go through the list. They haven't met that target for 5 years. They have an accountability problem. They have a communication problem. They have a culture problem. And they have an economic modeling problem. Their models simply don't capture the economy as well as they should. So this is a Fed that requires fundamental reforms. I'm not the only one saying it. You have the whole range of people now saying it. Politicians, economists, even those from the policy establishments are saying it. So it needs reforms. Now, if I were Chair Powell, I won't want to have a voice in this. I would want my institution to bring information to this process. Instead, he's sitting back and letting other people take charge. And that's not good for an institution that knows more about itself than others. It should be reforming from inside with the support of the outside.
Well, I got to tell you, it's a fantastic article. I'll encourage everyone to read it. I wish we had more time, Mohamed, but thank you so much. I enjoy our conversations.